How far would you go to find life-changing investments? Imagine riding a motorcycle across 6 continents, discovering investment opportunities in the most unexpected places. That's exactly what Jim Rogers did. He found fortunes where others saw risks, and today, we're revealing his top 5 investment secrets from around the world. Are you ready to unlock wealth from the 4 corners of the globe? If so, then you've come to the right place. Welcome back to the Early Stage Crypto channel, where we uncover the secrets of the world's top investments, financial strategies, and investor gurus. Today, we're diving into the thrilling world of Jim Rogers, the legendary investor who literally traveled the globe to find hidden investment gems. You won't believe the incredible insights he gained from his adventures, and we're here to share them with you and save you 6 figures in travel costs in 6 months of time, but hopefully ensuring 6 times the returns you'd expect without these 5 iconic investing secrets. Stick around, because these investing stories and the secrets they revealed could change the way you think about investing forever. Starting with lesson number 1, let's kick things off with a fascinating revelation about the power of first-hand knowledge that Jim Rogers learned while biking through Africa. You might not instinctually correlate biking through a developing country with investment research and massive financial returns, but in this case, that's exactly what materialized. For that reason, Jim Rogers' journey through Africa on his bike is a testament to the value of seeing things for yourself. While others were skeptical about the continent's potential, Rogers saw bustling markets, growing industries, and untapped resources. Point being, Rogers didn't just rely on reports or hearsay, like most lazy investors these days do with the advent of the internet, social media, and global news at our fingertips 24/7. Instead, Jim traveled to these places, met the people, and experienced the markets firsthand. This boots-on-the-ground approach gave him insights that others missed. For example, while visiting Zambia, he observed the rapid development in the copper industry firsthand, which led to profitable investments most others overlooked and thus missed out on. Here are Jim Rogers' biggest actionable tips to sniff out new investing opportunities before they become too mainstream to provide a life-changing return. First, if possible, visit the places you're considering for investment. Nothing beats seeing the economic activity and speaking with locals. Second, build local contacts and networks. Having trusted sources on the ground can provide valuable insights and help you make informed decisions. Okay, you don't actually have to bike through every country to witness these markets firsthand, but broadening your network isn't a bad idea, since international news can only tell you so much. Do you have a global network off which to bounce your investment ideas? If not, you may want to start reaching out. Next, let's talk about lesson number 2, spotting emerging markets, a skill Jim Rogers has mastered. During his travels through Asia, Rogers identified China as an emerging market long before it became the economic powerhouse it is today. He saw bustling cities, a hardworking populace, and government policies aimed at economic growth. Rogers looked for signs of rapid economic development, infrastructure improvements, and favorable demographics. He wasn't swayed by the negative news. Instead, he focused on the potential for growth and prosperity. Likewise, Rogers urges you to look for countries with improving infrastructure, a growing middle class, and government policies that support economic growth. Additionally, you should stay updated on global economic trends. Emerging markets often offer significant investment opportunities if you can spot them early. Now, let's dive into lesson number 3, the importance of understanding cultural and economic nuances. While traveling through India, Jim Rogers noticed something unique. The local culture had a profound impact on the economy and business practices. He saw how traditional values and modern aspirations blended to create unique investment opportunities. Rogers understood that to invest successfully in a country, you need to understand its culture and economy. In India, for instance, the gold market is influenced by cultural factors like weddings and festivals, which create predictable demand cycles. Jim Rogers' suggested action items are to research the cultural and economic factors of the countries you're interested in. Understanding these nuances can give you a significant edge. Secondly, he urges you to engage with the local experts and communities, but their insights can help you navigate the market more effectively. Believe it or not, investing isn't just about numbers, it's about people and their stories. Get to know them and you'll see the market in a whole new light. Next up, let's explore lesson number 4, or the value of diversification. Jim Rogers' portfolio is as diverse as his travels. He invested in various sectors and regions, spreading his risk and capturing opportunities everywhere he went. Rogers invested in everything from agriculture in Brazil to tech in China. By diversifying, he protected his portfolio from localized risks and tapped into multiple growth stories. Though it may feel unfamiliar and requires stepping outside your comfort zone, Jim Rogers suggests you diversify your investments across different asset classes and geographic regions. This reduces risk and increases your chances of finding high returns. Likewise, you shouldn't put all your eggs in one basket. Instead, you should spread your investments to protect yourself from market volatility. To put it simply, diversification is like having a safety net. It catches you when one part of the market falls, keeping you secure and balanced. Now, let's talk about lesson number 5, or the power of patience and long-term thinking. As an antsy, money-hungry investor ready for those gains already, this lesson can be the hardest to execute. However, it's been proven to be the biggest millionaire and even billionaire maker of all. I'm talking about the boring topic of patience, and yes, Jim Rogers is famous for his patience. He held on to investments for years, sometimes even decades, waiting for the right moment to sell. This long-term perspective has been key to his success. You know who else attributes his success and immense wealth to boring patience? Warren Buffett, so you're in good company if you're willing to wait it out. Rogers' investment in China is a perfect example. Despite the initial skepticism and volatility, he stayed committed because he believed in the country's long-term potential. Over time, this patience paid off massively. Given how boring and amorphous the topic of patience is, how exactly can you execute this effectively? Rogers suggests you set clear, long-term financial goals and create a plan to achieve them. Stay focused on these goals even during market fluctuations. Additionally, he urges you to avoid making impulsive decisions based on short-term market movements. Patience often leads to better results. Remember, investing is a marathon, not a sprint. Stay patient, stay focused, and the rewards will follow. As Jim Rogers said, the best education you will ever get is traveling. Nothing teaches you more than exploring the world and accumulating experiences. While that may be Jim Rogers' opinion, we do know and have featured on this channel plenty of mega millionaires and billionaires who made their fortunes and those of their clients without stepping foot outside their residing state or country. So it's possible international travel isn't the only strategy or a necessary precursor to all brilliant investments. If you're on a limited budget or have a fixed amount of travel time but still want to make millions with the right investments, then look no further than our video revealing the 9 brilliant pieces of investing advice from Warren Buffett's most iconic interview ever, which prove that you don't need to get outside of your small town to make a financial killing. In fact, according to Warren Buffett, getting his news online and the daily paper is enough data to make all the billion-dollar decisions he needs to. And traveling to a more bustling city or state would likely only distract him and make him poorer due to all the excessive stimulation and the in-your-face crowd opinions. Anyhow, there are countless investment strategies that can work, so like Ray Dalio says, once you understand your strengths and weaknesses, you should be able to leverage them to make those smart multi-million-dollar decisions, no matter your predisposition or past experience. If you want to hear what other millionaire-making advice Ray Dalio offered, click here for our video unpacking Dalio's top 6 pro-investing tips for 2024. Until then, we'll be here for you at early stage crypto, so feel free to smash the like button, hit subscribe, and let us know in the comments down below what financial guru you want us to feature or interview next.